Hello and welcome to a brand new episode of Fintech Ki Baat Dil Se. Today we have with us Mr. Sanjay Jain, who's currently a partner at the Bharat Innovation Fund. Thank you so much, Mr. Sanjay, for joining us today.
A pleasure to be here, Shreyas.
Great. Just to give you guys a quick background, Mr. Sanjay has been instrumental. Has played an instrumental role in India's journey of digitization through across multiple platforms. Mr. Sanjay has played a pivotal part while he was a part of Ispirit organization, uh, and essentially has been a part of committees that have designed various platforms like UPI, ONDC, and a couple of others, right? OCEN and those kind of platforms, right? Now, because of that, the topic for today's podcast is digital platforms that are building India's future. And Mr. Sanjay will take us through the journey of each platforms, the thought processes on how these platforms evolved, and essentially the kind of roles and the kind of impact that they are playing. One of the major examples of that would be UPI. So, Mr. Sanjay, before we deep dive and start talking about these platforms, we would want a quick background of you, like what you did, how did you, get where you are right now. Over to you, sir.
So, Shreyas, thanks for that. Just to be clear on some of these platforms, my role is limited to evangelization and, a little bit, not that much. Though in some of the early days, I was much more deeply involved in the development of these. So, in terms of my journey, I've been an engineer for most of my life. I did my comp science degree back in 1987. I've been in the industry since then, mostly doing software. At some point, I joined Google in India. I helped build a product called Google Mapmaker, which was a wiki for maps that was used to build map data for pretty much the entire developing world. About 170 countries, including India and China, were put onto Google Maps through that product. Post that, I joined the government of India to be a part of the Aadhaar program. I was the chief product officer there. Wow. And since then, I've been involved in the early conversations around many of the India Stack elements, including hands-on, designing the systems, etc., on a voluntary basis. This is post the Aadhaar program. And then at some point, about 5 years back, I became a venture capitalist to support early stage startups in these spaces. And since then, my role at all of these national scale programs has become really much more of an evangelist than a hands-on contributor. So I just want to be very clear that most of my role in the last 4 or 5 years has been around making sure that many people in India and the world know about these, can build on them and use them to improve the businesses that they're building.
Understood. Great. It sounds like a really interesting journey. So while I was listening to you, I like a little bit before we got into a podcast, I got a time to just go through a LinkedIn profile and a couple of other online media as well. One recurring theme that I see when I kind of go through your social media or when I go through any media related to you is mainly it's talking about building for Bharat. So if I'm not wrong, you also have a podcast called Build for Bharat, right? That's
Correct.
one thing. Currently, you are a part of you're a partner at a VC fund called Bharat Innovation Fund, which essentially supports, let's say, startups that are financial inclusion focused mainly. That is probably one of the main theses around that.
So actually at the Bharat Innovation Fund, we have two strategies that we work with. One that you mentioned is around inclusion. And there, broadly, our thesis is that these new age digital platforms that you're building national scale, they result in formalization and bringing more people into the formal economy. And they do it by reducing costs. So it allows a fintech to service a customer with a lower acquisition cost, onboarding cost, and servicing cost. And hence they can expand the market that they serve viably. And so we should expect to see many more people come into the formal parts of society because it's now viable to do so. But in addition to that, the fund, we have a second thesis, or in fact, that's actually the bigger thesis that we have, is that the Indian startup ecosystem is going to evolve from building pure execution-focused startups to actually building things with deep IP, which can create moats which will allow them to
Right.
succeed in completely new innovative spaces. So that's actually one of our very dominant thesis of the Bharat Innovation Fund is supporting innovators who are building in India, for India and the world. So we really have two strategies that we use to invest.
Understood. Understood. I would actually, at some point in this conversation, I would also want to probably get a couple of examples of the second thesis. What kind of startups would you probably connect that to?
Mhm.
But coming to that, we'll come to that in a couple of minutes. Talking about again, then connecting that dots and building for Bharat. If I look back at your if I look back at your career, you joined Google India, as you said, and you build a map maker platform. Post which you again joined and helped Government of India build the Aadhaar platform, and post which your contributions to UPI and a couple of other platforms in whatever role that you said you were there in evangelization and in some capacity in development. Again, all are literal embodiment of the word building for Bharat. So before we go there, I would want to understand from you on, like, obviously one of the motivation is the patriotism and the the zeal to build something for your own country. But how did that entire mindset shape your career journey or your entire journey till now?
So that's, thanks for that question. It's an interesting one. So when I was working for Google, at some point we actually had a conversation with the CEO at that time, Eric Schmidt. And he said, look, India is a very similar market to the US. Everything that we do in the US works in India. And so there was really no effort to build special products, etc., for India. While, you saw Japan, China, Germany, France, all getting a lot of attention for, what are really small markets. Right. And sometime around that, the realization hit me that what Google was serving was really the top end of the market, the English speaking, very not just speaking, fluent English Indian audience, which was very much like the rest of the world, rest of the developed world. And you didn't need anything special for that. But if you wanted to go beyond that, then you really had to sort of internalize what it takes to build for this audience and do it. And that would then bring them in, that would expand markets, that would, I think, be completely different. Now, and the second question was, who's going to do it? And the fact is that the multinationals really might do something to expand their markets, but the lead for it has to come from us. So if we don't build for India, nobody else will build for India. If we don't look to expand our horizons beyond the top, end of the market, nobody else will serve them. But on the other hand, I think there is really a lot of things that you can do to serve this market. And I use the word serve very explicitly because it's about helping them improve their lives. Right? It's not charity, it is a business, but at the end of the day, the customer has to benefit from it. And so it's really about saying, how can we do it in a way that it is social impact, but it is still a viable business. It's not charity.
Indeed. That is indeed a very delicate balance that I see a lot of companies still trying to struggle, specifically in countries like India. So when you look at a few companies that are, coming up in India, like even the startups that are built in India, a lot of them have that Me Too mindset wherein they pick up models or they are inspired by the models that they see abroad and try to replicate it. And as long as they are in the urban areas, that will really work well, right? It works well because the urban crowd is it's mostly westernized and those kind of concepts will actually work. But the moment they talk to the VCs and now they're like, now we want to achieve scale. And in India, to achieve scale, we all know we need to go tier 2, tier 3 and down. And when you hit that stage, you have to either build a completely new product or you have to kind of modify your product in such a way that the previous audience may not be interested, but the newer audience might actually get hooked onto it. So this is a dilemma that you see a lot.
Correct. I fully agree with you. And I actually don't think of it as a dilemma. I think they're slightly different markets. They happen to be geographically in the same space, but they're completely different audiences, and you have to understand the audience you're building the product for. So, and it might mean a different product. It might mean a different way to approach the market. Just, the go-to-market strategy might change, or sometimes the product itself has to change.
Definitely, definitely. This piece is really interesting. I mean, a lot of companies do struggle here, and I think what ideally should be happening is that the entities that are willing to scale in India, or they actually want to scale in India, should ideally build for the mass market first, and then kind of build a solution that will essentially resonate with the top 5%. I mean, that shouldn't be the main focus, and normally that is the main focus because those are the digital savvy markets, right? And that is where these kind of platforms come in, wherein they include the segments that are not digitally included first, so that they can have an easier market access to these kind of solutions. Great. Sorry, you were saying
No,
something.
I was just sort of reminded of, Clayton Christensen had this book called The Innovator's Dilemma, and
Uh-huh.
where he typically talks about exactly this, is to say that, the way the computer industry was disrupted was by building a PC for the masses, while the older computers were really, at the very large corporations used them. But they were completely disrupted because they built a product for the home market, and it grew from there. And that has actually disrupted the old large mainframe computers. And so you actually, if you start by saying, I'm going to build for everyone, for that I'm going to lower costs, I'm going to build a specific product, eventually, if you're able to serve that customer well, you will also serve the top end well. It is just that the journey has to start by having the mindset saying, I want to serve everybody.
Got it. And I think if you look closely enough, you can kind of draw that kind of parallel with a lot of platforms, specifically that you see in India. That platforms like for example in digital payments, if you look at UPI or if you look at digital payments as a space, from wallets which were only, let's say, top 5 or 10% of the audience used, down to solutions like star 99 hash, or the missed call pay or the 123 pay kind of solutions that are now enabling digital payments over feature phones. So you see that effect wherein earlier a solution was there that was used by, let's say, top 10-20% of people, and then to essentially scale it up, it went down to, I'm sorry, I just got a call. Yeah, so it went down to the grassroots level and enabled that essentially strata of the society to actually make transactions using the 123 pay or even the star 99 hash and those kind of solutions.
Correct. And that's the way to go, right? Is to say that we want to serve everybody. Now, as it happens, when we built UPI is really a backend, right? Which allows money to be exchanged from banks to one bank account to another, and through a switch. And at the front end, you could build anything. And the first thing that got built was a smartphone application. But at the same time, we said, we have to serve people with feature phones, and that's what star 99 hash did. It didn't really get the kind of volume that we thought it should. And so now RBI said, look, let's innovate for the segment. And they've encouraged innovators to come in. And 123 Pay is exactly that. There's 4 companies who are trying to build products specifically to expand the market of digital payments to everyone. You talked about wallets, and I think wallets are a great innovation. But the problem with wallets has been interoperability. Right? So if I want to make a payment to a shopkeeper who's on a different wallet platform than I am, I couldn't do it before. And that's actually what the old digital payment networks, with whether it was debit cards or credit cards, had solved. And UPI also solves for that. Now it does allow wallet interoperability. And so that's, I think, something which is useful. So primarily with the wallets, the problem was there's very much a lack of interoperability.
Agreed. Guys like, without naming any names, but when you saw that revolution coming in 2016 during demonetization, most of people had only a couple of QR codes which were highly pushing into marketing. But if you were onto any third-party wallet, apart from that, you were not able to make those payments, and that is when the interoperability of UPI actually came in as a boom. So definitely, I completely agree with you on that point. Now taking a step back here, we were talking about let's say the solving for India mindset and how it resonates across the journey. Sorry. And when you look at it from that point of view, one thing that really comes out to me is the Ispirit organization and the roles that you have played in it, and basically touched upon multiple platforms throughout your journey there. So would want to hear a bit more about Ispirit organization from you, what it does, and if people are more keen to volunteer into it, how it can be done. I mean, That would be a bit helpful as well.
Sure. So Ispirit was initially, the result of a lot of people who were looking to build products out of India. And the thinking in many industries is that finally it is the product where the value is created and added. So if you take a look, a while back, if you took a look at the airline industry, the airline manufacturers were profitable while the airline industry was really struggling. Right? I mean, so just if you think about it, there's 2 or 3 manufacturers who are actually making reasonable returns, and yet the entire airline industry was struggling because they're cutting fares and competing with each other, and because the value is at the product. The same with the pharma industry. It's a pharma industry that makes the profits, while the rest of it, the distribution, the hospitals, etc., all are very competitive and are not actually able to make significant profits. So the thinking was that even in the software product space, if we are the ones building the products, that's really where the value must be captured. A small team of people can do a product, do it well, and get outsized value for the country. And that was the thinking. And yet, till that time, we always, and particularly all the government rules, regulations, tax codes, import-export codes, all treated software in the service category, and as opposed to the product category. And so that meant many complex things for people building software out of India, software products out of India. And so Ispirit said, no, we need to really convert. The people who sort of set it up were primarily in that mode of saying, how do we make India's software industry a software product industry? And so for that, you need to have different kind of entrepreneurs, different conversations happening between people, and different representation to the government, etc., for changes. And we started with that effort, and the word product nation shows up a lot in that conversation, and that's really referring to this. And we started by working with founders and other entrepreneurs who are building for it, policymakers, etc. And that's the start of it. But that mindset also, I think, permeates to what we call the India Stack, and that has also become a big part of it. As you mentioned, Ispirit is a volunteer organization. It's a think tank. So where essentially what we are doing is, as enablers, helping others in the industry come together, work together towards some common goals. And we sort of have a thing about the volunteers not being financially involved in the result of what they do. So, we sort of keep profit motive out of it and say, at least those, because when you have a profit motive, policymakers look at you with suspicion. You go to them and say, look, I want this change to be made. And by the way, my company will benefit, right? They look at you in a different way. There's nothing wrong with that conversation. It is just that they will look at you and put a question mark saying, is this person saying something because it's in the interest of his wallet to do that? Or is he saying something because it's in the interest of the country to do that? So that was explicitly the thought that we said we have to have volunteers who are conflict-free, who will build these systems and guide us in the right way. So that is one important aspect that we must remember, that this only works if you are able to bring that together.
Understood. Fair enough. So let's kind of deep dive a bit into the Ispirit journey and the role that it has played in the platforms like UPI, OCEN, Sahamati, and most recently even ONDC. So I'm not sure if it is playing an active role in ONDC or not, but would be great to understand from you on how the Ispirit as an organization has played a pivotal role, at least in development of UPI, account aggregator systems, and a couple of other important platforms.
Yeah, so this really, Ispirit has not particularly played a role in ONDC, but at the same time, I think many of the thoughts in ONDC are aligned to it. Some of the people who are supporting ONDC are also part of the expanded, in fact, Ispirit family in a way. That makes people think they're related, but in a way they're not. I mean. It does matter, in terms of organizational structure and provenance, etc., that we be clear about this. But for the most part, from the concept of building for India, the concept of solving problems that we face, etc., and even the people, right? I mean, there's a lot of alignment and synergy. So it is natural to do that. But broadly, the way we work is, once some volunteer decides, and it's all volunteer driven, that something is important, some kind of change, then you bring together a team of people who are like-minded, who are able to sort of work together and say, what is it that we can do to bring about this change? And somewhere in the process, once the ideas become more clearer and firmer, you start getting into conversations with how that idea can succeed. Does it need just industry, or does it need policymakers? Does it need regulatory approval, and so on, right? So then you start to approach those stakeholders and get into that next level of conversation. And then eventually, and not every idea will succeed, not every group will succeed, but you end up with a situation where you get to something that could work, and where everybody is brought in, they understand it. And then finally, whoever is actually going to be implementing that change has to run through their own process to do it. So, for example, RBI was already on the journey of account aggregator, and we suggested how to make it more digital. But then they ran their own systems in terms, and Ispirit had no role in that, as to how they selected account aggregators to give license to, and so on. I mean, that's all RBI's role. But I think the concept, the APIs, we got involved in that thinking and not in the regulatory part of it. So the broad idea is that if you want to see a type of change being made, then you get a bunch of like-minded people and talk about it. One of the things that is not talked about because it gets overshadowed by some of the India Stack work is we saw a lot of startup companies relocate to other countries. So they re-domicile to Singapore, or other countries because of various issues about doing business in India. And Ispirit has consistently worked with the government to say, these are the barriers we see, and if they change, we'll have more companies who create for India, but are actually setting up the corporate entity in India as well. And that's very important for a long-term sustainability. And that's something which I think I've had a lot of success in, and we some of our blogs talk about it. But it's called the Stay in India checklist, and we try and make sure that the policymakers understand why we are saying it, what are the bottlenecks to startups doing business in India. But then on the other side, we have the platform stories that are coming out, which are about how we can make certain common rails that will then enable the entire ecosystem to build on top of it and just scale up really well. And OCEN sits in that category beautifully.
Definitely. When you talked about the Stay in India checklist and specifically the efforts that have been put around it, in the sense of the rails that have been built, the common rails across it, I think, that should probably be more than enough of a, for the lack of better term, carrot for the startups to be in India. Because if you look at, let's say, even a startup, looking to build on digital, building in digital payments, for example. I mean, so it works in two ways, right? And one thing is that it reduces competition barriers or entry barriers. Like, there is no scope to create a proprietary technology for digital payments in India as of now. Like, if you want to create a digital payment startups, it's as simple as integrating a UPI SDK, becoming either a TPAP or plugging in a different kind of a solution, and you are good to go. Like, there is a certification licensing process for TPAPs, but apart from that, it's all good to go, and you are a digital payment app that can scan and allow people to pay. So the proprietary the proprietor angle or the proprietary angle over there, proprietary technology angle, is like completely gone. The only value adds that I've seen been happening is probably when you look at companies like companies building, let's say, on sound, or companies building the sound-based payments either, or offline payments in like the star 99 hash kind of solutions, or solutions on top of the 123 pay piece. So digital payment now has been democratized to an extent that the entry barriers are like really low, until and unless you want to become an aggregator or you want to become a gateway. If you just want to become an app that is looking to acquire, so the way it is working right now, the way I have seen it working is now startups that are building in India on, let's say, fintech or specifically digital payments, are using digital payments not as a revenue model but more as a hook for people to stay into their ecosystem, and they are building other value addition services on top of that, so that customers stay in that ecosystem and they generate some revenue, maybe by cross selling financial products or cross selling some other memberships or whatever that may be. So
So,
yeah.
Shreyas, I think that's a good point that you raised, right? There's a maturity point to say that digital payments in India are now mature
Right.
to the point that you can take it for granted and you can build on top of it.
Right.
I mean, you can build a product. I mean, this is one of the examples we spoke about in the early days, is to say, let's say you want to buy flight insurance, right? And it's not right now, like you go to any of the the online ticket agents and they'll give you an option to check box and add insurance to it. But logically, you could say that, why should it not just be a QR code? I get to the airport, I scan it, and that pops up a question saying which flight, what time, your name, or some PNR, whatever, 2-3 things. And then you make the payment and you walk away, right?
True.
Or once you have registered with the thing, then you walk into the airport, there's just a QR code, you pay for it, you're insured, and you continue, right? And that way, you can build a journey with only one interaction with the user, right? Once they're registered, after that, it's a straightforward thing. And if your flight is delayed, the money should come back as a refund to the UPI address from which the money was sent. As simple as that. You could build a very simple journey around it because payments has become completely commodity. And I think that's a maturity point. And it was not the case, 5 years ago. But today, I think you are right. You have to take that as a given and say, what is it that I can build which will allow me to make the life of my customers easier? And what are the products and services I can deliver in that manner?
Definitely. But do you think that let's say now, as of now, the payment has become matured and has become democratized enough so that startups or anyone building can take it for granted and build around it? But do you think if more and more common rails like these come up, so one effect that they have is once the market matures faster because of the common rails, essentially the entry barriers to that market become very reduced. Like only entry barriers would be regulatory entry barriers that the regulators would put in place to keep the sanity and to keep the hygiene checks, right? But let's say if something similar happens in lending and something similar happens in a couple of other domains, maybe like ONDC is democratizing the digital commerce piece along with, so it has multiple plugins like payments and credit and all of that piece. So once this happens, do you think the excitement or thrill for building in India would kind of would be reduced or would vanish for founders, and they might actually look for greener pastures somewhere else so that they can actually build there and have something more proprietary? I mean, do you think that could also be one of the outcomes?
So I think there's two outcomes possible, right? One is the layering approach, right? So if you think of the internet, right, you got TCP/IP, and then people built something on it, and then the web came, and then people built more, and now you take those as layers as given, and you build on top of it,
right?
And that's how it develops, right? Is that the value addition comes because each layer that's built new has a lot of excitement. You build for it, and then the next set of people come and say, we've taken those problems, they're solved. Now let's look at new problems to solve. And I think there are quite a few problems to be solved yet before we get to that point where we say everything is solved. And when we get to that point, suddenly somebody will say, "Yeah, why not like this?" And suddenly it'll be a new thing, right? I mean, in fact, when UPI was built, people would say digital payments is solved. Visa and MasterCard are solving it. Correct, but UPI proved that no, it was not a solved problem. It was an unsolved problem, and it could be done much better. But then that's one example. The other example is with GPS, right? I mean, GPS is a common rail, and then we got maps on it. And then Uber said, I'm going to build a taxi service on top of it, right? And Meru and Ola and everybody did, right? It's just that because that became the commodity, the value add happened at a level above. Today, there are people who will say that, and I don't think it's a solved problem yet, given all the problems you're facing at that layer. I think there's still a lot of innovation to happen. But let's say at some point that becomes a solved problem, saying that if I want to go from A to B, here's the easy way to do it. Then somebody will solve something on top of that, right? Because there will be a new problem which will come. And that's the
Got
human
it.
condition. We keep on evolving, and the problems we need to solve today are different than the ones that were solved yesterday. And tomorrow's problems that we'll solve are different. And right, I mean, and yeah, so I would say that it's a great thing for a market to reach that stage where you say, okay, wo to ho gaya yaar, ab aage kya?
Right, right. But there will always be newer problems to solve and newer
Correct.
patches to reach out to. Awesome, awesome. That is like super interesting. I think as we see, right, a lot of one of the evolutions in digital payments that I'm like recently seen is people coming in with let's say cryptocurrency piece, and they are now want let's say NFTs and all of that to be transferable. So not related to the existing digital payment infrastructure, but they want those assets to be now digitally transferable legally in a way that cryptos and all of that could be used as a currency. So I also saw a product in one of the recent conferences that I went to, wherein they are basically building an app that is based that is backed by NFC technology that allows you to pay through crypto via the tap mechanism. Also, the acceptance is not there in India, but outside of India, I think that could probably be a parallel to what these kind of things, payment platforms like UPI are doing. That could essentially act as that if there's a digital currency, regulatory digital currency mechanism, comes in there.
So regulation, I think, follows technology. So I'm less worried about that, right? Eventually, if the technology works and people do it, regulators will find a way to bring it in. The problem
Right.
I actually have with a lot of the cryptocurrency space is the transaction costs are high.
Definitely.
And that to me is what UPI solved, right? Is that we said, look, there's no reason for this transaction cost to be so high. It was just a few bits going from here to there. And that, and of course, the assurance that money will flow and so on. But
Right.
eventually, even that is bits flowing, right? So that was really what I think as UPI we was looking at and saying is that, look, cards are a solved problem, but payments are solved by cards, but they're not as efficient. And what we did was we found something more efficient. And I do think that, I keep a watch on the crypto space, but I haven't yet seen those costs come down to the level where I would compete with the UPI on that. Right. I mean, I think there's a lot of novelty factor, which I think is great. I mean, it's if you think of the technology hype curve, everything starts with that, right? Where there's novelty as a big factor, and then expectations get set, they get broken, and then they get reset, and then finally real value comes out of it, right? So, so every successful technology has gone through that curve. I do think that cryptos are very early on that stage of the curve. The issue is that it's very hard to say early when trillions of dollars are already flowing into it, right? In early stage of any of these currency tech evolutions, you've not seen that kind of capital get there. And so in that sense, I think the capital has gotten there too early. Many other factors have come in, and I don't know how that will resolve. And because not everything that goes through the hype cycle will come out at the other end successful. But everything that comes out successful goes through that hype cycle. So, so I'm watching that space with keen interest. And I think there are many exciting innovations in there. But I have not yet seen why something would be better. Better can be because of low cost, better can be because of more convenience, better can be because of something else being enabled, right? There are many factors there also. People's desires. There's a whole bunch of factors that get into products. And so I think it hits on some of those, but not on all of those yet.
Agreed. Fair enough. So let's take a step back here and get back to UPI as a platform. So would want to understand from you the journey of UPI before it got it got famous, right? Before it actually got popular and before people started adopting it. So how was it ideated, and what was the mindset behind building it? What was the cycles that it went through? And probably, how do you see it growing and how do you see it evolving going forward?
So, I think it's a longer story on how it happened, but the shorter version is that the biggest issue we saw with digital payments, which was at that time only cards, was that the number of people who were able to use cards, both on the present a card and accept a card, both sides, was very small. We had close to 1 million acceptance points, which is really the devices where you can swipe a card. And you had only about 25 million cards in the country. Now, if you know, and I'm talking about 2014 timeframe, right? And if you know anything about cards and devices, where you have one, you have more, right? Everybody who has a credit card has three, right? And every shop that accepts, has a terminal that accepts digital payments has three of those also, right? If it's a supermarket, every aisle will have one. If it is a hotel, then there'll be many more, and so on. So the point was that 1.2 million acceptance points actually turns out to be maybe 200,000 to 300,000 acceptance points, and 25 million cards turns out to be maybe 1 million cardholders, right?
Got it.
So to that sense, it was such a small market, and the costs of setting up a device, the transaction costs, all were very high, and they were acting as barriers. So while you might say it was a solved problem, which is because the rest of the world was doing it, it was not working in India. So if we wanted to get more towards a cashless society, then we had to think about how we could take away those. So we went through those costs. And one of the biggest costs in credit cards is actually credit. You pay at a merchant and you pay 45 days later. There's a 45-day credit window, right? That 45-day credit window has to be paid. Interest has to be borne on that. There's a risk. What if the payment doesn't happen? That has to be borne. And then there's cost of fraud and so on and so forth, right? So, but the biggest cost is credit, which includes the risk and the interest. And which is the reason why credit cards have to charge those high percentage rates to the merchant, because that credit is involved. Effectively, the merchant is paying to give the customer credit through the card company. And also, if there are like frequent flyer miles or other benefits, all of those are being paid for by the merchant. So to increase usage, that's what the credit card issuers did, was give increased demand by telling people that, hey, you use a card, we'll give you X benefit, Y benefit, etc. They just kept on loading those benefits, but at the cost of the merchant. And so any new merchant who is looking to accept digital payments would say, I don't want to pay those costs, right? And if you are a business which is making a 30% margin on the product and you have to pay 2 to 3%, then that's a 10% out of your margin, right? It's a small number. But if you're a business which is running on a 10% margin, say a small kirana store or a small shop, 2 to 3% is 20-30% out of your income, which is crazy. And so they would not accept it. And then there's a fixed cost, right? The cost of the device. And then on the acquirer side, getting the merchant, doing the KYC, all of that was expensive. So those are the factors. These are real costs that have to be borne to get that ecosystem going, and which is why it was not taking off. So what we did with UPI was, we said, first thing at that time we said was, let's take credit out of the mix. If money is going from one bank account to another instantaneously at the time of the transaction, then there is no interest cost and there is no risk of non-payment. Two big costs go away. Right? Then we said, what can we do to get the device out of the mix so that you don't have to have a special device to accept payments? And there, smartphone came up as a beautiful option. And later QR codes came up as an option, where we said that, hey, this is going to take away that cost as well. So, so then we designed a system that took all of these costs out, but it was easier to use than anything else. And so that's actually what led to the design. Those are the considerations. Take costs out, make it easier to use, and then, the market will show what it shows.
Got it. So when you talk about taking the cost out here, the first cost that was out was a device cost.
Credit. First cost was credit.
credit. When you look at credit card, yeah, the credit cost was there, then the POS cost was there. That
Correct.
enabled deeper penetration into the market for the smaller
Yeah.
merchants as well. But since at that point of time, let's say in 2014, 2015, during which this all was being made, smartphone penetration in India was also very limited, right? I think we
But it was
saw,
growing.
yes,
It was growing, and also that is also why we did the USSD, because we had seen what had happened in Kenya with M-Pesa, right? Kenya and
right,
M-Pesa and Kenya used to run on feature phones with USSD, and so we
okay.
thought that's a model that might work for India as well. And
Hmm.
so we did both. We did. Our expectation was that smartphones would grow,
Hmm.
but at the same time, for people who didn't have smartphones, we also had the USSD option.
Okay, okay, okay. Understood. So at that point of time, let's say when it actually started, growing, let's say I think 2016 or 2017 was the inflection
16
point
was a
wherein
launch.
16 was a launch, and I think end of 2016 or 2017 was it when we actually saw the transactions mounting, right?
Yeah.
That is when it
So if you
started
look at
to.
the chart today, you look at that curve, and I show it occasionally in my
Hmm.
presentations. It looks like it's almost zero then, but that's because the scale today has gone out, become crazy. But
Massively,
if you
yes.
looked at it month on month, you would see there was
Hmm.
still growth,
Right.
and there are upticks whenever a new player entered the market, and
Hmm.
those are quite sizable upticks. But the other thing that happened, which was sort of behind the scenes, was a constant effort to bring down
Right.
error rates.
Hmm.
So initially, systems would be down, things, not the central systems, but at the bank or at your PSP end, and there were transaction failures. And there was a
Right.
very dedicated effort to say, what can we do to improve latencies, reduce timeouts, improve system uptime across the entire ecosystem. And that
Hmm.
uh, maturity, I think, took about a year.
Got
And
it. Right.
that maturity then is what allowed that system to take off, and the results are there for all to see. But I think that was building it first was the important thing. Fine tuning it next was also very important before it took off.
Definitely. And I think probably one of the times when actually it hit me that digital payment now is here to stay and won't actually not probably a fad or something that will probably walk away, was when this is just a small anecdote, right? When I was probably in a small village in Himachal, probably back in 2017, just early 2017, post demonetization, and this is probably a town with 1,000 people population, and
Mhm.
there were like no QRs at that point of time in any of those places. But at that point of time, like outside a temple near there was a beggar sitting there with a Paytm QR code saying, uh, "Arms accepted in this thing." Matlab, he had a
Correct.
poster saying that, and he had that QR code. And just out of curiosity, people were scanning and paying that because it was a wow factor for them. And that guy, at the end of the day, probably made more than $1,000 just because of that novelty factor, which otherwise he wouldn't have made.
Correct. Yeah,
So.
no, it's been fantastic how the countries adopted digital payments, and
Mhm.
and I think it's partly because it makes their life easier. It's makes everybody's life so much easier.
True, true. Having said that, and considering the fact that UPI now is something that you take for granted when you make digital payments, it's 99% of the time it's going to be the platform that you'll be using to make a digital payment. How do you see this going forward? Like when you look at it from someone from a point of view of someone who's either an industry outsider or someone who essentially is not that deep into the payment tech, it appears as if this has reached a point wherein it probably has reached the saturation point, or it probably has reached its peak, so as to say. So, do you see it just evolving or going forward in ways, or do you have any things in mind on way how it would evolve?
So I think NPCI owns the roadmap, and what they've done over time is try and find new use cases and enable them through UPI. Right.
Hmm.
So initially, if you recollect, as you said, there's no QR because QR
Right.
code was not very common in use yet, and part of it was because smartphone penetration was still not there. Plus,
Hmm.
the original thinking was not to do it through a QR code, but do mobile to mobile kind of transfers.
Right. Right.
But we saw around the world QR codes are taking off, and we managed to put that into the UPI spec, which then allowed for QR codes, which could be used for UPI payments, and they took off really well, right?
Right.
But then once that happened, then at some point for stock market investing, the ASMA model came up, which was again with UPI, where you could sort of say, look, I want to purchase shares and I don't want to give you the money right up front. I want to lock it in my bank so that when the IPO happens and I get my allotment, then the money goes out of my account. Till then, it doesn't go out of my account.
Right.
That mechanism came up. Then the recurring payments came up, and so on, right? So constantly, more and more payment use cases are being built and they're being enabled through UPI, because UPI at the end of the day is a very simple protocol between the banks, the NPCI, which is the switch, and the front-end applications. And it's actually very easy to add on to that protocol or rather make changes at the front end that don't affect the protocol at all. Right. And so those kinds of things will start to happen and are already happening. So I think every year or so you see these new features come in. And I think we'll continue to see that happen. That's one piece that I would say. But I'm more excited by saying, why don't we look at building on top of it, right? Assuming the digital payment is going to happen, what else can you do? Can I just go to a store and I mean a virtual store and say I want to buy a track of music? I just pay for it, and along with my receipt, I get back the song. I don't need to go through the checkout process, right? I mean, why do that, right?
Got it.
So on. I think we will find people think of and dream of these things and build them.
Definitely. Something that really, when we talk about innovation in payments, something that really has always struck a chord with me personally is biometrics in payments, right? Mm-hmm. Specifically, one of the reasons for failure rates right now is the PIN mechanism that we use, or also even when you go to a merchant and all of that, you have to enter that PIN, and sometimes people forget, sometimes there are issues around that, right? So one of the something that really had gotten me excited earlier, back in 2018, was when I heard a startup. I'm not going to name it for some reason, but one of the startups that had come up with a solution that allowed you to make payment through biometrics by using that thumbprint. You put it on that regulator issued device that is issued by a regulatory entity, and then the payment goes through, which is now the very similar to what the Bharat Beam Pay or Aadhaar Beam Pay model that happens. But how do you see this going forward when you look at P2P payments, right? Because this is mainly a P2M mechanism right now. But evolution of biometric in P2P payments, wherein you would be able to use the sensors that are there on your smartphone to just either tap or scan your face and the payment is authenticated. Do you see that happening? Or how do you see that happening?
So in biometrics and the conversation on privacy, a lot of the conversation is moving to say that the biometric device should be in my control. So if it's like a camera, the merchant shouldn't scan my face. My phone should scan my face and approve the payment.
True.
Right? Because the whole idea is, if I put my fingerprint into some place which I don't know how much to trust or not trust, let's say they get a copy of it, then what can they do with it, right? So you don't want to do it. So except in very tightly regulated environments, you want to switch it to where the biometrics is on the consumer or the user side of it.
Exactly.
So from a privacy perspective and control perspective, it's much better. So that I think is already happening. I mean, the iPhone is of course doing it for the iPhone and that Apple ecosystem. But broadly, I think that's the way I would expect to see the consumer payment ecosystem change, because interestingly, again, from an interoperability perspective, it's so much easier. If, let's say, I use my phone and I unlock it with biometrics and make the payment happen, the other party doesn't need to change, right? I mean, it could be no device, right? I mean, I go buy, there's a coconut vendor on the street side. I buy coconuts or pani puri or whatever, right? And all there is a QR code. He doesn't even need a device. He has a small device which speaks out the money that's coming in, right? And that's why they end the innovation on top of UPI, so that the merchant can continue doing his business without interruptions, right? And it's almost self-service. So that's so I buy tender coconut water at the end. I just pay with my device. The guy doesn't need to have a device, and the biometrics could be on my phone, and that's it. right? And whether I was using PIN or biometrics wouldn't make a difference.
Definitely. But I think the problem here right now that we are seeing is a classic standardization problem, wherein, let's say, in a closed ecosystem.
But that's the benefit, right? You don't need to worry about standardization. I mean, the standardization is on between my app and the rest of the ecosystem. The biometrics is only between me and my app.
No, the sensor standardization, when you look at the variations of sensors that capture either a face or a fingerprint, there are 3 to 4 main primary technologies that go into a fingerprint capturing, right?
Correct.
One is the ultrasonic one is the optical fingerprint scanners, and there are 2 to 3 different standards in play in the industry right now.
Correct.
And when you look at face also, in a closed loop ecosystem like Apple, there are 2 set standards. One is a LiDAR based face detection, and the other one is wherein it's an optical fingerprint scanner that the Apple uses. So that in that kind of a closed ecosystem, it becomes very easy to implement any kind of feature. But when you look at something, let's say in an Android ecosystem where there are variations on same manufacturer's multiple devices, right? So Samsung's one phone will have an ultrasonic and the other one will have an optical scanner. How do you standardize the biometric data collected by these guys and use it to authenticate a transaction?
No, but that's the point. As long as the biometrics data doesn't leave the device, it doesn't matter.
Okay.
As long as I'm matching on the device.
So you're talking about non-server based.
Exactly. Which is what Apple does, right?
Okay.
I mean, even so the Apple device does the match on the phone itself.
On the device, yes.
Right? So it doesn't need to go to the server. And the question of accuracy does come in, and each manufacturer then has to set the thresholds to make, find that there's always a trade-off between security and ease of use, right? You can, because biometrics is not an exact match, unlike a PIN, which is an exact match, right? Where you're saying, my PIN is, to choose a bad example, 1, 2, 3, 4. Did I type 1, 2, 3, 4 or did I type 1, 2, 3, 3? Right? And that's a simple binary. Yes. But in the case of biometrics, the match is not binary, right? It is probabilistic. And as a result of that, what you have to do is set a threshold to say if the match is above a certain confidence, you will accept it or not. So if you set the threshold too high, your security goes up. But on the other hand, your failure rate also goes up. And vice versa. If you set it too low, your security goes down, but your matches are more successful. And so there's a threshold that has to be set according to the use case. And so if it's payments, you might want to keep it more secure. If it is something else, maybe a little less so. But that's something you can do on the device. You don't need to do it at the server. And it also depends on the characteristics of your sensor as to what those curves are, right? The failure rates and all those curves that you have. So I think it's important that we let the device manufacturers deal with it. And so standardization on the payment side is already there, right? I mean, it's just an unlocking of the payment that happens.
Understood. So it's more like how the current, slightly similar to how the current card-on-file tokenization piece works. You do it like a biometric on device tokenization, wherein you just send a verified token after the biometric is authenticated, and you just send either a binary yes or no kind of this thing output saying that this is verified or this is not verified.
Correct. Though typically it's a little more cryptographically secure, so it's not just a yes or a no, but you have a digital signature and a security element and all of that to make it happen. But yes, in principle, that's the right one.
Understood. Fair enough. I think this has been a fairly interesting conversation so far. I mean, I could probably go on for another half an hour, but I think we have hit our time threshold for today. What we'll do is, we'll come back for the next episode and we'll talk a bit more about how the OCEN platform is evolving, how the account aggregator platform evolved, and how do you see those implications in the ecosystem. Super excited about that. But for today, we'll end over here. Thank you so much, Mr. Sanjay, for your time. It was really a pleasure speaking with you.
Yes, a pleasure as well. Thank you.
Thank you so much. Thank you.